On the last trading session of Friday, gold spot printed a closing price little above $1,845 per ounce. The number is rounded and the market is closed. And on the last week, gold traded as low as $1,842 per ounce and as high as $1,877 per ounce. Numbers are rounded and the market is closed. Now, from a pure technical standpoint, gold is trading above its all daily simple moving averages in an attempt to switch the trend from bearish to bullish for the RSI readings. It's moderate on the charts, 58 on the daily, 57 on the weekly, and 58 on the monthly chart. Now for the support levels and the resistance levels. The support levels are seen at 1834, then 1820, which is the neckline of the inverse at the shoulder, then 1800 as a round figure. The resistance levels, it's 1870, 1890, and 1910. The pivot for the weekly chart at 1855 and daily chart last trading session 1851. May you can place a sell at these levels because we are trading below them for an intraday transaction. That's all. Move on now to the economic calendar. For the economic calendar for the coming week, we are waiting for the following economic headers, considering also that there are 2 days holidays, Friday and Thursday on the United States. We got the existing home sales on Monday and the PMIs on Tuesday and the GDP on Wednesday. That's all. We'll move on now to the trading strategy. Hi again, it's always nice to meet you in a new episode of our Gold Price Weekly Forecast Gold today. If you are new for this video, just let me guide you how this works. We are going to start with a quick recap of what we have been talking about on the last video, on the last week. Then we will examine the chart of the US dollar and the chart of gold, and we will arrive at a conclusion. Now, as a quick recap on my last video last week, I have put some sort of a criteria for trading because I have mentioned that there are some confusing signs on the charts daily and weekly. I said if gold is closing below 1860 for one session, this means we could see a correction up to 1820, and if we close above 1870, we could see a continuation of the rally up to 1910. We got the sell, and we sold when gold returned back to 1860, and this position is still opened. Before going through the chart of the US dollar and the chart of gold, let me just drag your attention for two notes. The first note is that we are heading into the last week of the month, and this week happened to be the week of the Thanksgiving. And 70% of the occasions on, let's say, the past years, the past 10 years, the market is going to rally in the week of the Thanksgiving, let's say, holiday. Now, the second note, which is highly important and it's more significant than the first one, it's that in the coming week, President Biden is expected to name the Fed chair, as I said, in the coming week, and he is going to select either Powell to continue as the Fed chair or to choose a brand new Fed chair, which is Brenner. Now, the point, if he is going to select Brenner, this is a game changer because Brenner is more dovish than Powell, and she sees that the economy still needs help, which means she is going to be so much relaxed on the increase of the interest rate. Maybe it's not going to happen before the year 2023, and she will be also so much relaxed about the bonds purchasing program. So if Brenner is selected, expect a big rally in everything in the market because the US dollar is going to sell off. Moving to the US dollar chart, I have to tell you something at the beginning that you got to differentiate between two things, between the minor trends and the major trends. Now, the US dollar, when you are talking about the major trend, it's an uptrend. There is a very clear double bottom at 89.60, and we are breaking out since this double bottom took place. And this breakout is expected to continue until the US dollar hits 102, which is enough to break gold and silver down, and euro and pound and everything else that is priced against the US dollar. But at times, an emerging headline could change the course of the market, and we could see some sort of a minor trend evolving. And this headline is what I was talking about just a few minutes ago when I was talking about Fed Brenner to be chosen as the Fed chairman instead of Powell. This could change the course of the events, and we could see some sort of a correction in the US dollar because she is dovish on the economy. Moving to the gold chart, we got with us today the weekly chart of gold, and as you see, this is the falling trend line which connects the highs since the past year of like $2,070 per ounce up to now. And as you see, gold have managed last week to score a clear and visible breakout above this falling trend line. Now, this is not the first time is doing a breakout. We have got some sort of a breakout like a few months ago, and the breakout, as you see on the chart, gold traded as above 1900 briefly, then sold off following the comments of the FOMC and the Fed members. Now, what we got to do, or why I'm bringing this up, is just to tell you that gold is on the international supply level when it's trading up on the highs, and it's not like the time to be brave to say, okay, that gold is going to break out and to go to 2200 or 2300s. This is a possible scenario, but I think it's less likely to happen, considering the circumstances or the overall circumstances of the market. But it's still a feasible scenario, but we don't want to be ahead of ourselves. So in the coming week, I will follow also the same criteria. For now, since gold is below 1860, I do believe that we are going to decline a little more up to 1830 to 1820, and I see a possibility. Possibility will be fueled with fundamentals in case if Brenner is choose to be the Fed chairman. I do expect some sort of a rally of gold with a target of 1890. More than that, I cannot judge at the moment. So we are going to treat gold from now on, okay, on a step-by-step basis. Now you got to understand something that gold is a market that at times lacks liquidity. So if it sells off and you are stuck at the highs, maybe it will take you like a few months for gold to come back. So it's not the time to show bravery and courage with gold. The best thing to do with gold is at the moment is to apply this buy on the dip and sell the rallies whenever it's possible at the levels that I have mentioned. That's all for our video for this week. And please, guys, visit our website www.goldcoachy.com. You will find more ideas and articles and techniques that will help you trade this market and other markets. And thank you guys again for watching this video. Please share, like, and subscribe. And we'll see you hopefully in a few days in another video.